The Fed says further interest rate hikes are in store. Powell said he's talking about a couple more hikes to come, potentially. So anyone looking for a policy pivot today did not get it. He acknowledged the Bank of Canada's pause, but said the Fed isn't there yet. There were some changes in language in the Fed's statement. The Fed says inflation has eased. So some progress there, though it noted that inflation still does remain elevated. Let's check out how markets are reacting to the Fed's decision, not just the decision, but also to Powell's presser. You can see the S&P 500 shot higher amid the presser. So we had been seeing a negative day throughout the trading day, but in positive territory following or amid Powell's press conference with this language where he's saying, you know, it's gratifying to see disinflation happening. It's not happening everywhere, though. So he said, you know, still progress needs to be done there. But it seemed like he was a bit optimistic on the inflation front. However, still saying that more interest rate hikes are needed to continue into this restrictive territory to get inflation down to target. Let's take a look also at the U.S. dollar. We've been keeping an eye on that this year in reaction to the Fed's moves. And today in particular, we're seeing the dollar fall quite significantly, almost a full percent, also in line with the time of the presser. We're going to dig into more of this reaction and get you analysis throughout the show, including right away with Michael Pugliese, a senior economist at Wells Fargo Corporate and Investment Bank. Thanks so much for joining us, Michael.
Thanks for having me.
So let's start with, you know, the language being used today. Powell saying that inflation is easing. So it does seem like he's being, bringing some optimism to the table today, perhaps, even though still trying to remain hawkish and saying that there are more hikes to come.
Yeah, I mean, it's a very tight line to walk. So I think on the one hand, for the Fed, right, you've seen progress, right? You've seen headline inflation come down. You've seen core inflation come down. You've seen some labor cost measures start to ease, like the employment cost index yesterday. But directional progress, I don't think, should be confused with mission accomplished, right? Inflation is still well above the Fed's target. You've still got, you know, wage growth and labor cost pressures more broadly running above what would be consistent with that 2% inflation target. And so I think the Fed's trying to walk that line, and that's why you've seen them downshift from 75 basis points to 50 basis points to 25 basis points. So you've seen that reflected in their policy actions, but, you know, they're not done hiking yet, let alone turning to a policy easing. And I think that reflects directional progress, but not yet mission accomplished.
So I wonder, just on the market reaction today, Michael, what do you make of the sort of flip that we saw in the S&P 500 or in the dollar? Take your pick. But in terms of, you know, market reaction to what Powell had to say.
Yeah, I think it makes some sense, right? Because there's always the risk that the Fed is going to come out and materially push back on market pricing, right? And really push back on what's priced for rates or just kind of the path more broadly. And I think so far maybe there's been a little bit of that, but not anything major. So it makes some sense to me that, you know, for example, equities would rally off the back of almost just the relief that the Fed didn't come out and drop the hammer, which is, I think, you know, a positive for equities in the near term.
What would dropping the hammer look like, though?
Well, I think, you know, you could see, you know, the Fed come out and say, hey, there's still a ways to go. The market's mispriced on this. You know, we see terminal getting to at least 5.25, maybe even higher. There's still no chance of any type of rate cuts for the year, and really just reiterating that the market's priced wrong. And I think there's a difference between the Fed maybe hinting at that and coming right out and explicitly saying it.
It's interesting. You know, he wasn't intending to talk about a pause at all, but there were a couple questions about, you know, are you planning, are you thinking about pausing or taking a meeting off in between hikes. So the word pause came out of his mouth, but not in the way that perhaps some people might have been listening for or waiting for potentially.
Yeah, right. And I think that's another thing that acts as a boon to risk assets, right? Is look, we can debate maybe there's 25 more in March and another 25 in May. Maybe it's 25 in March, then done. But I think we're clearly getting a lot closer to that peak in the terminal rate, which means I think once rates peak, how long they sit there is once again up for debate. But more likely than not at that point, the next move is a cut rather than a hike. And so I think that makes some sense and really is in sharp contrast to where we were even just 6 months ago when the Fed was hiking by 75 basis points per meeting and showing very few signs of even slowing down, let alone stopping.
How high do you think the Fed will end up going?
Yeah, I still think 25 in March is very likely, as was reflected in that policy statement they released an hour or so ago. Whether or not they go in May is a close call. We've got one in our forecast. I think I'd still lean in that direction, but it's probably close at 50-50. So that would suggest that 5, maybe 5.25 for the upper bound for the Fed funds rate is where we ultimately peak. And
in terms of the inflation situation, Michael, how well do you think that the Fed is reflecting what you're seeing in terms of, how inflation is coming down, or areas where it's not?
Well, I think they see the same data we do, and they see that directional progress in the realized inflation data. They look at forward-looking measures, and I think they see more progress coming. But as we all know, there have been a lot of head fakes on this before, where maybe inflation slowed for 1 or 2 or 3 months, and then it shot back up. And so I think they're hesitant to just say, okay, well, we've seen progress over the past few months. We can forward project the next few months, and then we should to go. I think that they're understandably still cautious, even given how that realized data and forward-looking data looks right now.